Hi folks, this is Matt Curfman from Richmond Brothers with our January 2014 economic update. In this video, I'll be talking about some of the important events that drove markets and movements in January. We'll also be looking ahead at what might happen in the coming days and weeks. With that in mind, please note the disclosures that are below me here for the commentary we're about to have. Markets ended the first month of 2014 on a down note. They were driven largely by worries about an emerging market currency crisis, and that is actually affecting the economies of countries like Turkey, Brazil, South Africa. While these issues haven't affected the U.S. economy yet, they are being felt in the volatility of the U.S. stock market. For the month, the S&P 500 fell 3.56%, the Dow was down 5.3%, and the NASDAQ was down 1.74%. It's never fun to watch a sell-off in the markets. However, we're happy to report that U.S. indicators show that the economy is actually still growing at a modest pace. Investors got their first look at fourth quarter gross domestic product, or GDP, and that was clocked in at a solid 3.2%, giving us high hopes for 2014. Earnings season also began in January, and nearly half of the S&P 500 companies have reported. Earnings growth for these companies stands at over 7%, which is the best showing we've seen since the fourth quarter of 2012. Revenue growth to top that is at 3.5%. While the December jobs report showed a troubling decline in the creation of January's weekly unemployment claims that painted a rosier picture following that note. This could indicate that the December report was tainted or skewed a little bit by seasonal factors. Though we don't have monthly data for January quite yet, economists are actually predicting a significant bounce back, putting labor market growth back on its positive trend. That would be a good thing. The Federal Reserve met during the last week of January and voted to continue the program of tapering their quantitative easing, which is slowing the monthly bond purchases by another $10 billion a month down to $65 billion. Investors see this move as a sign of confidence that the economy's recovery are still moving forward, even though we have a ways to go before we can call it fully recovered. Overseas, the Federal Reserve's tapering of quantitative easing policies, which were compounded by local and political financial instability, is actually helping to drive currency sell-offs in emergency markets. Investors have been fleeing local currencies, and they've actually been buying U.S. dollars. Over the last few years, investors have actually poured money into developing economies in search of higher returns than they can get domestically. Now that the Fed is cutting back on its easy money policy, weak fundamentals in many of those emerging market countries are actually being exposed, and those same investors are now moving capital out, further driving down the currencies and threatening growth abroad. With these problems, and while they haven't affected the U.S. economy yet, a prolonged emerging market currency crisis wouldn't be good news for the global economy and also for some U.S. companies, because they may actually see their growth prospects fall with declining demand abroad for their products. It's too soon to know how this whole situation will play out, but we're certainly watching it carefully, and we're actively developing strategies to mitigate the risk for our clients and their portfolios. Looking ahead, investors will probably see more choppy days as we watch to see how this emerging market crisis actually affects the U.S. markets, and we'll wait for more domestic economic indicators to keep you updated on. Once again, this is Matt Curfman with the Richmond Brothers, signing off for the month of January 2014. I hope that you have found this commentary both fun and informative, and we'd love to hear what you have to say. There's a comment section below if you'd like to write in there. Or if you have any other questions about what you heard on this update, or would like to have a personal financial situation discussion, please give us a call at 517-536-5000, and we'd be happy to chat with you. Thanks for your time, and make it a great